we are talking about a lot of central banks this week, Ven. Let's start with the Fed, or post-Fed reaction in the markets. I mean, did you hear a buy stocks message from Jerome Powell yesterday? What other market implications are you watching for?
Morning, Anna. I think that, what we got from the dot plot yesterday was not really a dot plot. It was where they lost the plot completely. They're trying to square a circle here, which is not working. So what did they tell us, essentially? They told us that the labor market is going to be pretty strong. So they're expecting a lower unemployment rate than they did in December. They expect core PCE to be a lot higher than they were expecting in December. And they revised up the economic growth forecast from 1.4% to 2.1%. That's a humongous jump, and that is well above the trend growth rate for the US economy, long-term trend growth rate. And not only did they do that for 2024, they expect growth will be above trend in 25 and 26 as well. And then they stick with 3 rate cuts for 2024. So it's an impossible circle to square. They've lost the plot there, and the markets are finding it hard to digest that.
Okay. And Ven, so you don't buy the argument that, OK, 2 months of higher inflation prints than expected, but it doesn't change the fact that they are gradually moving back towards that 2% target?
Well, it certainly looks like they're going to be missing the target for a long time to come, admittedly by their own projections. So, if the rate is restrictive enough, then how is it that inflation is not coming down? And therefore, the scope for rate cuts, at least 3 rate cuts for 2024, looks overstated to me. And the markets which is why the bond markets are not rallying a whole lot, because they don't seem to be buying into that narrative themselves. Here is a Fed that is fighting the economy. It is fighting all the data that is coming from the economy, saying that the economy is strong. So it shows that the Fed's bias is to cut rates, regardless of what the data shows.